Thank you, Chetan. Set the tone for a lot of discussion today. I think what caught my attention was that I think before we leave the room here today, I think all of us will be having a crypto account with the way you had given us the recommendation there, Chetan. Well, we will now jump into our first panel discussion for the day. One of the important aspects about any transformation or when we talk about future, it's critical to actually have a perspective that is from the top. It's important to actually look at what's happening and look at the trees, but it's more critical to have a view of the forest. And the first panel that we have today is actually something that we will be learning a lot from, a panel that would actually be giving us perspectives on strategy, innovation, culture, and of course the impact on the decade ahead. So without much ado, let me welcome my panelists on the stage here. My first panelist is the CEO of Mawarid Finance, a face that is very familiar to most of us here. Rashid, please welcome on stage. We have with us another CEO of a very leading financial services player in the country, someone who's actually been known in the market for a long time, someone we have very, very high, deep regard and respect for. Please welcome on stage Mr. T.K. Raman, CEO of Finance House. After that famous presentation of Chetan, how can we have a panel without someone representing neo-banking, digital banking? So we have with us someone who's special here. Please welcome Radu Topliceanu, the head of neo and personal banking. We talked about digital banking. How can I not have someone whose surname is AI? We have the CEO of Kiya.ai with us today. Please welcome Managing Director of Kiya.ai, Rajesh Mirjankar. What's in it if we don't have quality? So we actually have with us someone who's an advisory board member at QualityKiosk, Ravishankar Gopalan. Ravi. How many of us in the room have heard of 5S? I see a few hands going up there. 5S is a very well-known concept in the quality circles. It's a very important methodology that is adopted in process reengineering and lean. How many of you have heard of 6R? Well, if you didn't, here we have on this panel 6 R's. It is, I promise, it was a real coincidence. It was not by design. We actually have 6 people here, and what's the probability of having all of them starting with the letter R? Yeah. So that's what we have here. So thank you again, gentlemen, for joining us today. It's a very important discussion. I'm actually going to start with a little bit of a show of hands with the audience today before I start with the panelists. How many of us in the room today believe that AI is affecting us in more ways than one already. That's only 70% of the room. So there are a few people who still think it's not impacted yet. My second question is, how many of us think that the real challenge in front of us is that to do with people and not to do with technology? That's 50% of the hands. So that sets the tone again for the conversation today, and I'm actually going to start with you, TK. And I'm actually going to start with what actually is what we say is front and center of any strategy. How do you see the shift? You've been in the industry for many, many years, and you've obviously been seeing what's happening. You're witnessing the change happening around us. How do you see the change in the trends of customer preference? How have customer preferences shifted over the years? And what does that mean for any financial services player in the context of being future ready?
Thank you, Ram. Good morning, ladies, gentlemen, fellow panelists. I think before I share my thoughts on changing customer preferences, I think it's important to understand who is the customer we are profiling. So as we sit today in 2025, I reckon that when we talk about customers, we're talking about individuals who broadly fall into the millennials and the Gen Zs, and the second half of the Gen X, so to speak, let's say broadly 1982, 83, and later born people, or businesses influenced by them. I think there's been a phenomenal shift in preferences. I will try to articulate my thoughts on that into 5 streams. When it comes to banking, people clearly have moved from transactions to experiences. If you are a bank, you are no longer compared to another bank. They compare you to an Uber experience or an Amazon experience. So what does that mean for a bank? Obviously, we have to rewire our thinking to see how do we design seamless customer experiences and digital journeys. I think that's the takeaway for any bank that wants to survive in the future. I think the second important thought that comes to my mind is a shift in customer preference from a generic product to a more customized and personalized. Hyper-personalization is a buzzword, but I'm saying something that appeals to an individual, right? So that's the expectation from the customer of today, which is no different from what they expect from an Amazon or an Uber. So you are being tracked, they know what's your next move, do you want Uber Eats, do you want this, do you want that? So the shift that the banks have to do in their mindset is a move from being a reactive service provider to potentially someone who is a little more intuitive financial partner of the future. So that is another theme of what the changing customer preferences and how we should react to that as an institution. It's often said that branch banking is dying and customers prefer more omni-channel interactions, which is true. We have all seen that. But I think in the next 5 to 10 years, it will still be a fairly hybrid structure that will be more relevant to customers, especially in this part of the world. Yes, it is digital-led or digital-first experience for regular day-to-day transactions, But when it comes to a little more complex banking products and services, at least I believe that customers still want that emotive, empathetic trust of a human advisor or an interaction. So I believe it's still going to be a fairly hybrid model for some time to come, especially in this part of the world. I think the other change in a customer's preference, which is very noticeable of late, is people don't like siloed banking applications anymore. I think they're moving more towards an ecosystem, a lifestyle that integrates their travel, their leisure, their education, healthcare, and banking, all bundled into a one super app or whatever. So the banks of the future, or the banks that want to survive as banks in the future, will have to think about ecosystem builds. Either they build the ecosystem or they become part of an ecosystem that makes them more relevant. I think I'll stop there. I just shared a few of my thoughts on what customer preferences are changing. And I think the most relevant institution of the future will be the one that adapts to these customer changes and, beyond being relevant, be a trusted financial partner to those customers.
Fascinating, TK. I think, so you clearly have called out a few very important takeaways here. And firstly, of course, you got to be seamless and holistic, as you say. It has to be part of a larger ecosystem. You will be looking to be hyper-personalized or personalized. Make sure that it is relevant to the customer, but also make sure that it is phygital or hybrid. It's not just about being digital. But I think what I love in your takeaway is that customer preferences are changing, and if you aren't keeping in them, yourself in the middle of it, then you soon become extinct. And that actually brings me to my next question to you, Radu. And it's important that we actually now talk to a digital banker here. Chetan just talked about the advent of so many neobanks coming up in the region, and we're talking about what's happening and TK Raman just talked about the changing customer preferences. Now, the reality is that we have an ecosystem that actually has banks who have invested in their ecosystem, as we call it, right? So as banks embrace the path that we're talking about, as we move more and more digital, what would you say are the key learnings from the digital first experiences, right? That both in the region and outside the region that you would have seen, that incumbents should actually be very sensitive about and bear in mind. So you actually are learning from both what was done right and maybe what was not done right by the digital banks that others should actually be learning from.
Thank you, Ram. First of all, I think great minds think alike. All your points resonated very much with me, TK. So thank you for sharing with us. Now, I'm personally probably a sort of a hybrid myself. I started doing banking 20-something years ago when the bank was very traditional, but my first role was as a digital banking director. Of course, 20 years ago, digital meant SMS, and you had to know where to put a dot or a comma, how to write a message and everything. And afterwards, the things evolved. And now I'm leading Mashreq Neo, which is our digital first proposition for consumer banking. So I live on the both sides of the fence, if I can say. Now, coming back to your point, Ram, I think first of all, we need to acknowledge that the incumbent banks are starting from a very strong position. They are building on a legacy of trust of the customers. Customers trust their banks. They are building on a legacy of regulatory compliance, and no shortcuts, no cutoffs related to regulations, related to compliance and everything. And again, this is very, very important. The third very important pillar is the risk culture. A legacy bank has an embedded in their DNA, they had the culture of risk, measuring risk, managing risk, taking risk. And some of the neobanks are lacking on all of these three points. I'm not going to use examples from these markets, but if you are looking at N26, which is a very well-known European neobank, they spent probably 3 to 4 years fighting to sort out their house because they had really, really heavy regulatory issues. So coming back, incumbents are starting from a very good position. But of course, they need to adjust to the new world. And probably the first thing, and you already touched upon it, it's the customer centricity. This is not a buzzword. It used to be a buzzword sometime after the financial crisis, because before the financial crisis, everybody, at least in my region, if you had good processes and decent pricing, you're a hero. The market was growing very fast. Everybody was pushing product, especially lending. But then the financial crisis came, world came to a halt, and everybody asked themselves what we are going to do next. And everybody's answer was, we are going to be customer focused. But most of the banks are failing on this. And this is an area where the neobanks are extremely good. They are putting the customer first. They are looking for an issue that the customer needs to resolve, and then they are solving for that issue. So I think that's a very important thing that the neobanks are doing. The second thing is agility. Agile, again, it's a buzzword. Some organizations are telling one morning to a product manager, you are not a product manager anymore, you are a product owner, we are agile, good luck. What we saw in the neobanks especially, they are truly agile. From the way that they are building their products, from the way that they are structured, and from the way that they are very, very fast in trying things, taking big bets. Some of them are going to pay off, some of them don't, but they are fast in trying, failing, or succeeding. I would say these two are the most important things, and maybe a third one before closing, it's the brand and marketing. The neobanks, the digital banks are coming with very fresh brands which are appealing to the youngster, and they are coming with brands and marketing which is mobile native. The incumbents bank are still living probably in a place in which there is some traditional marketing, some traditional approach to the brand build, to customer acquisition and stuff like this. You have to change this, and you have to have a brand and marketing which is digitally proof. Thank you.
Fascinating, Radu. I think essentially you've called out that banks shouldn't forget the fact that their customers trust them, because they've always been known for managing risk, and that's really why customers are trusting them. And they've built a brand over the years, so don't forget that. And stay focused on your customer. I think that's the essence of what you just said. And I don't think anyone could disagree with this. But I think an interesting point that you probably also highlighted is, as new neobanks come in here, it is also going to be important that they create their own identity, which is a very important aspect, from a market standpoint. And that takes me to a very different kind of a dimension, which I'm going to take with you, Rashid, right? You've always been an advocate of collaborating with fintechs and technology players, and you've been advocating.
Present the whole customer journey, the products, everything. I think all of that, the fintechs can really support it. Now, can the banks do it themselves? Maybe, but they need time. This will help them by the time they've generated their own maybe product, their own digital transformation. By that time, it will be too late for them. So I'll just go back that you have to have the right management without going into the details of this management. I'm sure they will have their expertise, they know all of their know-how, but I think the speed factor is very, very important. Now, I think we should not look at things that we want to do it in 1 month. We should look at to do it the same day. We should look that we need to capture the most of our current capabilities at the same time. If we just go and say, okay, let's do it, we want to introduce it after 3 months. After 3 months, that will be a new requirement. Your existing customer that you're thinking to offer them as if they are your alpha customers today. I think that's how I look at it. Now, who could be your enabler to do it? I believe that we as a financial institutions or a bank, we should be the enabler for the fintechs. And also we should be the enabler for the fintechs to take us very fast into the market. I think speed is very essential for us. All of us here, I think we have enough experience when we talk about our expertise. But I think what is happening in the market, we need to go to the market in a fast pace by collaborating with our fintechs, with the whole ecosystem. I think that's very, very important. So I think I'll just go back to the speed of implementing and bringing our products to the market, to our customers, with the right ecosystem.
Very interesting. So in essence, you're calling out that if you have to be relevant, you have to be agile, and you have to be nimble and fast. And time is of essence, so speed is the operating word. And if you have to actually be embracing speed, it has to be with a collaborative effort with partners, and it's important to drive that partnership. Very interesting, Rashid. Thank you for that. And if I take that to you, Rajesh, I think that's a very important aspect here that Rashid called out, where we are talking about innovation that is driven with partnerships, right? And today, one of the things that we are seeing most banks talk about is, there's a lot of hype value, should I say, around AI, right? I got to do something with AI is something that everybody is looking up to. But it's also critical that you don't get into a trap and you really create value. I mean, the whole idea of doing something for the sake of it doesn't serve any purpose. It has to genuinely add value, right? So my question to you is, if banks are looking at driving AI-driven solutions, as someone who's actually been engaging with banks in their AI journeys, how should banks look to genuinely create what you would call as real-world value using AI?
One good part about speaking after Chetan, of course, is with Chetan speaking first, you don't need ChatGPT to answer any questions. He's spoken about most of the benefits of how digital banks have grown faster. And I think one of the core aspects has been adoption of technology. And when we look at that aspect and then reflect upon what Mr. Raman said and Mr. Radu said and Rashid said, it's a combination where today banks are actually people-led. So good managements can lead good banks, and good banks have good growth. And what as a core driver is there is technology, of course, as always. But I think when we look at AI, it's important to make sure that we don't go by the hype of AI and just adopt it as a big program. There is no singular AI platform that can meet all the requirements of one bank. It is all simple algorithms that sit in different components that together then orchestrate through humans and technology a process that will engage a customer in a better way. I think that is the core aspect that is to be remembered, that somebody can't come and sell one big AI platform and say this will meet all your bank's requirements. Because in that case, it's no longer people-oriented, it becomes a model by itself. So importantly, a bank cannot be led by a model, it has to be led by its processes and its data. So an important part to remember when you look at adopting AI is to say adopt it in pieces where it is relevant and evidence is there. I've seen adoption of AI and we've done that 2 decades ago in compliance. And that benefit was shown because banks were then compliant to the regulations as they progressed with the progression in AI on whether it's anti-money laundering or anti-fraud, etc. And that's why we have a safe and secure banking happening in the ecosystem today. Leave aside whatever percentage of frauds may be there, but it's minuscule. It's not scaring people away from banking, and it's not scaring banks away from running banks. So that's the proof of pudding that AI works. The second set that has worked is in chatbots, where you're able to engage with customers in a conversational UI and manage this in a manner where the customer feels engaged. And the loss of what you call as the deficit of connect that was there with digital banking, where people felt that a mobile app has put me away from the bank completely, is sort of blended with this chatbot. But in the chatbots of yesterday, if I were to term it, these were a set of 200 questions, and there is somebody in the backend making 3,000. right? We can argue whether those were self-created or whether it was created, but we know that somebody in the backend is reviewing these 3,000 questions. The future is going to be that, and as Mr. Rashid rightly mentioned, the Gen A is looking at having their own form. Like my son studies in college now. In my whole lifetime, I have 2 bank accounts. Right? I proudly say that. And when a third one calls, I say, no, I bank with 2. When I leave one, I'll come to you. My son already has 5. And he has got a purpose to say, this is for cards, this is for this transaction, this is for this merchant, I've got better discounts here. So what is he doing? It's actually becoming a search engine, literally, to say, where are the best deals? So when we look at AI, the important part that has to be looked at is SEO today is not being driven by a browser. SEO of today or tomorrow will be driven by REST APIs that will link into the OpenAI and those APIs to say, how can I prompt somebody to think about me? Because those are all processes to say, how do people think? Now you've got to make people think by saying, I'll push the data that makes you think about me. That will be the new SEO, right? And so that is one change that I see in AI in banking, where my website will move through REST APIs, but it will be very personalized to what the customer is thinking. How will I know what the customer is thinking? That is where that comes to the next point. If you look at the change, and I'll just, before I get to that point, I'll mention that where was the growth in banking coming? And that reflects from Chetan's chart. Growth in banking 3 decades ago was in branches. If you had more footfall in the branches, then branches grew, business grew. Then the growth in business started with the networking. So you had to approach the customer. So you had, from branch, it turned to having business correspondents who would then approach, and you had agents who would approach and then build banking. So the more agents you had or the franchisees, you would build banking. Then came the browser. So just about 6 hours, I'm saying 4 Bs here. Then came the browser, where if you had internet banking, then you had banking growth, right? And then it was bring your own device. The mobile came in. So remember one thing, that it has always been taking banking to the customer where they prefer at their convenience. So from the mobile, the Gen A is no longer on mobile devices. You please look at saying how many of your children today are looking at mobile apps. They aren't. They are on artificial intelligence, which means it drives me to the point that your next drive of future of banking will be on an AI agent. I'm not just mentioning AI, agentic AI, because there are benefits to that, but it's also third-party agents in which you will have it. So when you drive a strategy for the future today, you cannot just think and say, it is my AI that I will drive for my customer. It is actually going to be you being a part of the customer's AI. And that is one big shift that will take place. So I think AI talking to AI will be the next big drive, where you will have an AI compatibility framework. You will link into APIs of AI engines. You will drive intent, you will drive response, and you will drive actions. Actions is what you have your core for. Response is what you will define by regulations. And intent is what the customer will define. So I think that's one change that will happen in AI.
Fascinating, Rajesh. I think so. It's not about you having your own view on AI, but you belonging to the customer's AI. And this reference you made about intent, response, and action is very powerful. And it also gives a lot of food for thought for many of us in the room here about what our own AI journey is likely to be. And I've known you to actually be having points of view on what comes up next well ahead of time, and you've been pretty accurate at that for a long time. So this one is something that we will all watch out for. But you actually talked about people, and I'm going to take that to you here, Ravi. I think there's a very interesting point that Rajesh made about how you actually you essentially have to build a culture that actually fosters innovation, that fosters resilience. And it's not that easy, because there's always a phase where there is a fad, there is a phase where there is a peer pressure. So if you aren't doing, then you're left behind, FOMO as they call it. But If I have to ask you, I mean, how should banks be fostering a culture that is more, should I say, sustained, that allows them to actually be innovating in a continued manner, independent of the uncertainties that one sees in the market, right? So how does one actually foster that culture?
Well, it's a very tough question, but see, when we talk about culture, it is the set of behaviors that we expect from a group. So we're all on the same page, right? All the panelists spoke about customer. So the first and foremost thing, since every one of you is a change maker, I would think that put customer right in the middle, not at the periphery. Customers will have to be part of your design. So build a feedback culture. What do you mean by feedback? Do we recruit customers to test your product across all your product cycle? Do we even open this up to our fellow people to kind of test it, friends, family? If you won't have feedback, if you don't put feedback as a mechanism that people can take it, then your products will be more inside out rather than outside in, right? You have to build products faster, fail faster, but move forward. So build a culture of failure, which means that allow people to fail, people to experiment. Today, when I go to customers, the POCs are driven by people, by hippos, like people who are at the highest paid positions, right? It is not coming grounds up. So how do you create a culture where people can actually experiment? Your people down below. And more importantly, if you want to build resiliency, you build the KPIs at a horizontal level. Each one of you drive departments, right? If you have to undertake a payment transaction, today it goes through the channel, it goes through APIs, it goes through.
There was a lot of discussion. I would refer to human trust because as we are moving forward, Gen AI especially is going to become a part of the banking life, day-to-day life. And what would be extremely important would be our ability to go beyond technology and keep the human interaction alive with the customers. And also very important to take whatever the Gen AI is giving us and be able to explain it to retain the trust of the customer. Because there is a lot of danger in using the Gen AI. There is a lot of trust or mistrust. So being able to explain it to the customer to keep the level of trust, for me, that's very important for the future of banking.
So staying human is important for banking.
Yes.
I like that. TK?
I would go for embedded banking. I think it's going to be more and more important for institutions that they are not necessarily the top 3 in a country, for example, to adapt to a model where they are either a part of an ecosystem or they build that ecosystem that customers are looking for.
Interesting. Embedded banking. Rashid, what would your pick be?
I think still I'm going with the team that the right team that can take any banking going forward. I still believe that after 5-10 years, will be the same group here or other ones who are going to replace us that going to look how we should have the next level of banking. So I think the right team or the right execution, that's what should be happening also down the road for all of the banks.
So you have to build leaders who actually are embracing the future. So you're betting on having the right talent and leadership in the bank. Thank you. Rajesh?
So I'll go with Radu and Mr. Rashid as well. I think banking will remain people-oriented. Technologies will change. So I think the bankers will remain on the panel in future. The vendors may change. So we've got to probably think about saying that.
Or you have agents, your agent representing, and we have my agent representing.
So I'll put it, I think security will come first. I would say that a security posture of a bank will define its future. We would soon have quantum computing coming in and others, so they will bring their own threats. What business the bank does is always going to change based on what the customer wants. But how secure the bank can run its business is going to depend on its security posture. So I would think secure banking will remain.
Secure banking is an important aspect of
That's right.
being future ready. Yeah?
That's right.
Thank you, Rajesh. Ravi?
So I think banking will become very interesting, right? Today, I mean, very honestly, if you look at it, certain levels and below, it is kind of boring. In the sense you keep doing the same transactions day in, day out. With technology coming in, it's going to be a blend where actually bankers can create a huge difference. It's not going to be that in the next 5 years you'll have technology running banking. But it will be people that will be driving it. There'll be more innovation that will come about. We'll probably do more with less, but it will be more value add for the customer. So I would think it's a blend of technology and humans, with humans still playing a part in deciding what technologies that need to be used.
So he's keeping with the 4 Bs, from boring banking to blended banking, yeah? All right. I am actually going to open up to the audience for questions that you may have for the panel. We can take 2 or 3 questions. I see a hand go up there, please. Can someone pass the mic to the lady here? If you can introduce yourself and then ask the question.
I'm Priya Sengupta. I'm part of Emirates International Operations. My question is to the panelists. We spoke a lot about technology. We spoke a lot about future of the bank, future-ready banks. I have a question with all the geopolitical disruption, with shifts between which currency, which countries take participating. How are you going to be future ready for such disruptions? Also, technology is hugely dependent on internets and connectivity. If those disruptions start impacting geo-economical conditions, how are these future-ready banks going to handle it?
You want to take this?
I can probably take one part of the technology side, and definitely I have business people. I think tokenization will address it in a big way. Digital currency is going to be impacted. And I think when you look at geopolitical aspects, and then you look at also the connectivity aspects, you are able to take currency offline and give it the same flexibility as much as currency in physical form. So I think tokenization will help resolve that.
Radu?
To comment on the geopolitical aspect of it. I'm not going to comment on the reality today. I will just say that people always find a way to go around the geopolitical to find solution. I'll use my personal example. My first 20 years, I lived in a communist country. Afterwards, there was a revolution. Now Romania is a capitalist country. So complete change in the geopolitical system. But people found a way, and still the country is growing. And I think this will be the same with the banking, with the geopolitical around us. Yes, it's very turbulent. There will be a solution to be found.
Thank you, Radu. Any other questions? Can you pass a mic here?
My name is Hari Padmanabhan from ANSIA. One aspect which I thought every banker talks about today in many jurisdictions is about regulation. So how do you see the regulatory response to what's happening in the environment, and how do you see your wantingness to adopt and work with a digital-first, AI-driven technology being maybe speed breakers or impeded, I don't know, but the speed of what you want to do, how do you see that being impacted by regulation and the speed at which regulation is moving?
Regulating the speed, by definition there. Yes. Raman or Rashid, you want to take that?
I think I'll just focus maybe in UAE here. I think we're working very closely with the main regulator here. If we look at the central bank, I think, and throughout maybe Chetan presentation, he's already highlighting certain things that the initiatives came from the central bank. For example, the open banking, having a better platform when it comes to transfer of money. I think our regulators actually given us heads up on what could be a risk down the future. And based on that, we have to make sure that we are not get hit by this. So it's a precautious approach that I think our regulator working with us toward implementing the right solution for our customers down the roads. And I think that's one of the main things that we are well prepared with before we go into any solution, that we want to make sure that, yes, we are being obliged or making sure that we implement what's the regulator here, we think it could be a risk down the road. And I think recently there was a big circular linked to the open banking, how it should be done. Another circular that came out even hitting the implementation of the core banking. If you look at it just before, I think 2 months ago, any bank can go and change any core banking without going back to the central bank. Recently, the central bank want to make sure that those customers, our customers, basically are been well treated before any bank takes its own decision by changing the core banking to ensure that any risk that has already been mitigated. So I think here in UAE, we're moving on the right track. I think as long as we want to put all of our stakers in front of us to ensure that we don't get hit by any irregular practices.
Thank you. Please.
Yeah.
Sorry, carry on. No, carry on, please.
So from my experience, see, regulators are the most intelligent people. They also want to co-create products with you, but sometimes they just don't know. So many a time, what would be good for us would be to probably engage with them early and do that advocacy. And I've seen that they've really opened up, whether it be providing sandboxes, whether it be putting up regulations to kind of make the businesses very, very favorable. So I would think that as businesses will grow, they will also catch up, they will also learn. But it is also impending on the bankers to also educate them.
And just one point I want to add there, in addition to what Mr. Rashid said as well, and is that about the crowdsourcing of threat intelligence. Because while the regulators have got better, I think threat intelligence, bringing together that globally is going to be really helpful.
Thank you.
I would just like to add
Harun there.
one more
Please.
point to that. Hari, I think the way I look at regulators and regulation is every financial institution will have to take regulation as a given, right? So the way you look at a regulation from a lens of, is it an opportunity or is it a challenge? I think there are enough ways to look at regulatory promulgations that are coming out now more as an opportunity for collaboration and building ecosystems than as a challenge. That if you have the traditional thinking of, I own banking, I am a bank, and I do not want to collaborate with the fintechs, with the retailers, with whoever else, I think the same regulation becomes restrictive for them as opposed to someone who's more willing to either build the ecosystem or be a part of the ecosystem.
Thank you. Yes, Harun.
Hi, yeah, my name is Dr. Harun Darsi. We've spoken a lot about the technology and the business and so on. Tell me, what is the future readiness of possibly a newer Islamic bank and the Islamic banking connected to AI? So where is these discussions being held and who's leading this?
So if I can paraphrase your question, where are we on neo-Islamic banking in the journey of the industry? Is that the question? Yeah.
Yeah, I think, just going back still to maybe Chetan presentation. I recall maybe almost 10 years ago, myself, I come from banking, Islamic banking, one of the pioneers here, Dubai Islamic Bank. I remember at that time, when I was at that bank, it was the only Islamic bank in UAE, Dubai Islamic Bank. When we are looking at our numbers at that time, we are not even reaching 7% of the total banking financials in UAE. Now, if you look at Chetan, now we are almost touching almost 20%. So there is a huge room for the Islamic banks to grow. Now, it's up to the Islamic banks to choose their approach. Yes, I do believe that there could be a huge potential for a neo-Islamic bank, supported by its own approach when it comes to digital proposition. But however, I think the best maybe solution that it should collaborate with whatever existing here. Just maybe touching on one of the experience from my current background, we are working with lots of fintech companies to ensure that they go to the market by taking our own product, which is Sharia compliant, to their customers. So actually we are expanding in that, and they see that as a niche. So I think there's a huge potential for the Islamic banks. Maybe we did not see that yet, but I do believe that there is a huge potential for the Islamic banks to grow in that area.
Maybe if I can just Just that if you are looking at Mashreq Neo, we are catering both for conventional or traditional customers and for Islamic customers. We are providing fully Sharia compliant products through our app. And we are seeing in the end, it's a choice of the customer if he wants to go conventional or Islamic. And I don't see big differences between the customers. The customers which are choosing Islamic are as digital and as advanced and have as high expectation as the other one. So I think in the end, it's a customer choice, and the banks should be able to provide both avenues.
Thank you. Lovely.
If
So,
you allow-
please.
I do believe that always is a customer choice, to select which is preference, if it's conventional or a Sharia compliant. But our customer, they should not feel that difference. The customer, they should get the right products that they're interested in. They should get it in the same manner that's been offered across the whole banking sector, regardless of their Sharia or not, or a conventional bank. So I think the speed factor is very important. They should feel it as a seamless transaction, and they compare now, the features of the product itself. Is it suiting them? Is it as fast as they want it? And if it's compatible when it comes to the pricing. Once we have, I think, that level of offering, then it becomes a norm business activities that done. But still, I think the customers would like to see the Sharia compliant banks are more and more coming to the market here.
Got it. Well, we will be having the panelists at the next break, which is after the following panel. So you could always ask them other questions that you have. I may sadly have to draw the curtains. I've been given some nasty looks by my colleague here. So I will have to close this panel. But may I thank on behalf of the audience here, the panelists for a wonderful discussion. Thank you very, very much.